Dzień dobry, dzień dobry. Good morning, everyone. Such a great turnout. I mean, it's unbelievable. Friday morning and everybody is in the room. I hope, we hope that everybody is going to be in the room, but at the same time, maybe you could choose, to go skiing somewhere. But fortunately, we are together here to discuss very important issues. And this turnout means that everybody is interested, but also this turnout means that the situation as described in international press is not that horrible like everybody could see. This turnout says that we're doing fine and we're on a great path to success. There are some risks and opportunities, and we're going to be talking about this today. So what's in the menu today? The menu is very simple. Together with our friends from Hogan Lovells, we'll discuss political issues, we'll discuss tax issues, we'll discuss risks and opportunities in the current real estate market in Poland. And we would like you to share the opinion, we would like to discuss, we would like to talk to each other, because what we are also looking for is just to have one single voice of what is happening in the real estate market, investment market in Poland. MIPIM is within 2 weeks, so we would like that Polish professionals, Polish and foreign investors investing in Poland have one common opinion, one common voice about what is happening in our country. First, Sean, Doyle and Felicki from CBRE will give us a short presentation about real estate market. Then we'll have Zbigniew Marczyk from Hogan Lovells. He will talk about new taxes which will be imposed in Poland. And then we'll have panel discussion. Feel free, of course, in between to ask all the questions you have. Raise your hand and ask our professionals. The panel discussion will be at 10:30 and we will close hopefully around 12. So also one very important information, our today meeting is broadcasted on a webcast, so if you have possibility to share this with your colleagues in your companies, please do. It's worth for them also to take in part and to know what we're discussing here. And one last thing, please enjoy the breakfast. I hope the business will continue like that, and the next year we'll be able also to have a good breakfast meal, not only croissants and coffee. So enjoy. Thank you very much for attendance.
Okay, so before we hand over to our friends from Hogan Lovells to discuss the political changes in the country and the implications for real estate of those political changes, I thought it was important to just go over, as we normally would at this time of year if we didn't have these political changes, all of the positive things we're seeing in the market, and it truly is positive. 2015 was a year of records for the Polish real estate market across sectors. And this, translated into a year of record in terms of take-up, both in the office sector, the regional office sector, the regional offices, and the logistics sector. And all of this is sort of symptomatic of, continued economic growth, continued very, very strong economic growth. In terms of Warsaw offices, that translated into around 830,000 square meters of take-up, which completely blew out of the water any previous record for take-up. And probably the most important figure is that of that 830,000 square meters, there was 300,000 square meters of net absorption. So that's coming from new entrants into the market like Goldman Sachs, but also the growth of companies, both foreign and domestic. And we've seen that across the market in Warsaw. In spite of a record year of deliveries, we've been talking about, or the international markets have been talking about the pipeline in Warsaw for some time, but in spite of what was another record year in terms of deliveries, vacancy actually fell from 14 to 12%, and this was as a direct result of this net absorption we're speaking about. Across the city today, we have some 450,000 square meters under construction across all sub-districts. Of that 450,000, 300,000 square meters is under construction in the city centre, which sounds a staggering amount, but if you put it into perspective, almost 200,000 square meters of that 300,000 space in the city centre is already pre-let. So with most of the space due to come on stream in Q2, Q3, we are very hopeful that much of the city centre space will get taken up. And we see this in iconic schemes like Q22 with a very high level of pre-lease, Warsaw Spire at 85% pre-lease, and the list continues. So we are not nervous about the Warsaw city centre office market in any way, shape or form. There is, however, we do notice some other trends in the market, and that is rising vacancy in certain sub-markets. We have seen it in Mokotów. Mokotów today has around 15% vacancy. However, again, with regards to Mokotów, we see limited development. There's only 40,000 square meters under construction in what was previously the most active development market in the entire CEE region. So we're very bullish that in time this vacancy in Mokotów should come down, but Mokotów has its challenges with regards to congestion, and there is a certain flight of tenants from Mokotów to other locations. Similarly, the Jerozolimski corridor, Warsaw's third market, there is around 160,000 square meters under construction over a net absorption of only around 30,000 square meters. So we are watching these two markets very, very closely, and we do predict that within the next 12 months there will be a rise in vacancy in the non-central locations. However, the key trend in the market is the flight of tenants from B-class buildings to A-class buildings. We still have around 60% B-class office space in Warsaw, in spite of everything that's under construction. Obviously, that will change in the coming year, and it will become more like 50-50%. However, with this sort of flight of tenants from B-class, we see other opportunities. In Mokotów, we've already seen virtually every single available construction site get sold to a residential developer over the last 12 months. And similarly, we are noticing a similar trend in other sub-markets in the city. So what we do anticipate is that we will see significant rise in B-class vacancy. Much of the A-class stock will get taken up, and any vacancy that does, some of these buildings which we will view as structural vacancy, we do see opportunities in both the residential A-class conversions to A-class office space or potential sort of conversions to hotels. So there are a few instances of that. And we are seeing significant growth in both the residential market, the PRS sector, and other sectors such as the hotel. So I'll pass over now to Przemek, who'll touch on the regional office markets.
Let's maybe swap, yeah? Can you click? Thank you. Good morning, everybody. I think the measure of the success of the regional market offices outside Warsaw is how much time we spend as agents, as investors outside Warsaw. And I think this is the perfect indicator about the activity of the market. I know that some of you even have the golden PKP card, travel card, which allows you to travel freely all year round between all the cities. So I think that's a perfect indicator. And the reason for that is simply because the market is very, very healthy. Sean mentioned about the booming demand on the Warsaw market. But actually, if you take a look at all cities accumulated, starting from Tri-City going to the south, we have extremely good year in terms of the results. That's again a record take-up, a record net absorption. Net absorption was even higher than Warsaw. It was 340,000. That's roughly 10% of the market. I think that shows the depth of the market and the power, strength of the market. If I speak to our office guys last year and also currently, they mentioned a few things. First of all, this phenomenon of the growth of the market is visible everywhere. So both the bigger cities like Kraków, Wrocław, but also the second tier, Poznań, Katowice, Łódź, or even the smaller cities, which for us, like investment capital markets, are not yet on the map, such as Szczecin or Lublin or Rzeszów. At the same time, if you take a look at the demand side, it's coming both from the existing tenants and also the newcomers. And this is very clear and very strong trend, which I think is the boosting element for the market itself. Focusing on the supply, we definitely see the increasing depth of the market. It was predominantly the ground for the local developers, which are now very experienced. We're chatting with some of you before about the strength of that market. At the same time, we see bigger names, national players, international developers, which are penetrating that market with a very big success. So I guess that trend of healthy demand, which is also kind of supported by the supply, will continue this year. I'm pretty glad that on one hand this demand is balanced by the supply, because sometimes we hear about the challenges of the liquidity. And I believe if we have the critical mass in cities such as Wrocław, Kraków, and also the second-tier cities, that will give a comfort to investors like you, Przemek, and few others, to be even more bullish about the regional markets. So for us, it's very exciting here on regional offices, and we look to meet you guys active outside Warsaw. Thanks.
Right, probably the standout performer of all of the markets is probably the logistics market. The logistics market over the last couple of years has seen incredible growth. Per annum, over the last 2 years, we've seen around 2.5 million square meters of take-up in 2014, 2015. In both years, that translated to over 1 million square meters of net absorption. So this in itself is an incredible statistic, not only for the logistics market, but also for the growth of the Polish economy. And we're seeing this demand come from 3PLs, from a huge amount of manufacturing coming in, which is bringing down the unemployment rate in smaller regional cities as more and more firms move from Western Europe seeking to cut costs. Interestingly, during the recessionary period, Polish logistics and manufacturing was when the real explosion began. Across the country, we've seen vacancy rates fall from 11% down to 5% by the end of 2015. Today we have 900,000 square meters under construction, the majority of which is built to suit. However, we are seeing an increasing trend of developers witnessing this incredible level of demand and feeling more comfortable to deliver speculative stock. From all of the major developers we are seeing now, this accumulates to around 40% of what is under construction today will be speculative. But interestingly, the investor demand is there as well. We currently have 3 large portfolios under offer in the logistics space, and certain elements of that, significant elements of that, are either vacant or sort of under construction, yet to be pre-leased. So I think it is clear that, given the strong levels of demand, which is expected to continue, we see groups like Amazon moving into the country who expect to expand even further. They now have some 360,000 square meters taken up in just 1 year. Other groups like Zalando and significant other companies coming from the UK, France, Germany, from across the globe. However, all of this demand, which has brought vacancies down across the country, has not yet translated into rental growth virtually anywhere. We still see sort of very, very flat levels of rents across the country, ranging from sort of €5 in Warsaw Zone 1, Krakow, down to around €3 and below in certain regional markets. But across the country, in the key 5 markets, Wrocław, Poznań, Silesia, Łódź and Warsaw, we see levels, between €3 to €3.50. And so we do believe there is, an argument that if you select the right location, both from a developer and an investor perspective, you will see security of income. There is very, very low vacancy within those core locations. Poznań, Wrocław, even now central Poland are getting down for around sort of 2% in the case of Poznań and Wrocław, but the other markets are now catching up and sort of, experiencing these very, very high levels of demand. I'll hand over to Przemek just to finish up on retail.
Next swap. We're pretty big guys and there's not enough space here, so apologies for that. Retail is a very interesting market and at the same time very dynamic. And I think in the context of today's kind of topic, changes, opportunities, what is happening on the market, I think exactly retail, which is exposed to that changes. And just to mention, currency fluctuations or the tax on retail that our colleagues from Hogan will just elaborate in a second. it has definitely direct impact on the performance. Having said that, the market in general is very healthy, and I would like to just maybe focus on a few fundamentals and trends on the market. If you take a look at the economic background, GDP forecast, disposable income, all that is very positive and is promising, giving strong fundamentals for the market itself. Things like the program 500 plus, which you guys may be also benefiting from soon, from April, ignoring the idea what was behind that, I think will definitely translate into the spendings. I think I had a chat with Marek the other day, and that's a pretty substantial pot of money that will be pumped into the retail. So I think that's a good thing, actually, that will happen on the market. If you look at the supply-demand side again, on the retail front, it's stable. We have 11 million square meters of retail space across Poland, which means the density is relatively low. It's still below the European average. But I think what is happening predominantly is a kind of change in the formats. People are pretty bored with the hypermarkets, old type things. They seek for something new. With the increase of the disposable income, kind of brand awareness, especially in the bigger cities, we want to have quality. We as customers expect not only to shop, but to shop in the proper places, to have good quality of services, good quality of amenities. If you want to go for lunch, it doesn't need to be Burger King or something like that. It can be proper, decent, quality stuff. And I think in response to that, we are seeing certain changes on the market. On the supply side, format is changing. We are seeing increase of diversified retail offer. A few examples in Warsaw, for example, even Connoisseur or Griffin project in Halakoszyki. That's kind of the response to the changes on the market. Additional thing which is also slightly linked to that is the high street retail. And it's not yet established in Poland, in Warsaw, in any of the cities, but actually that's a kind of trend that will continue to grow. And in the context of the kind of focus on the quality from the customer perspective, it also has a translation into the older stock, which is a pretty big portion of what we have on the market. And definitely this is the asset management initiatives, rebranding, refurbishment, extension, downsizing of the schemes. I think that's the trend that we'll be observing quite actively on the market this year and also next year.
So we'll just quickly talk about where we see the opportunities in the market.
Actually, it's the other way around, yeah?
Do you want to continue?
You start, we ignore what's
on the screen, sorry. Where we see the opportunities. As investment agents, we talk, I think, too much about yields. Too much. Thanks, Keen. We talk too much about yields, cap rates, and there's always that level of comparison. There's probably not enough detail going into, which is why we focused on the occupational markets. We don't go into enough detail on where the true rental levels are, where the effective rental levels are. And these are things which affect across the sectors. We heard Przemek speak about retail, and one of the biggest impacts on retail at the moment has been downward pressure on rents, the tenants clubbing together effectively and putting landlords under pressure. We expect them to use the current political climate, to sort of further, enhance their activities when it comes to putting pressure on landlords. But ultimately, we'll give you reasons why we don't think that should be a major issue. As it pertains to the office markets, within Warsaw, we believe we are getting close to the bottom of the rental cycle. Obviously, there are still some instances where headline rents are held up and propped up due to relatively large incentives being given, but I think the market has become, and most of the investors in the market now have been long enough in the market and are sophisticated enough to know where a sort of sustainable rental level is. So we believe now, when it comes to Warsaw, getting around the sort of €20 mark, this is getting close to the bottom of the rental cycle. Obviously, it's not that long ago we remember seeing rents of 30 plus euros in Warsaw. With the current levels of supply, I don't believe we will hit there again in any time in the near future. But certainly, I believe when you get down to a sort of 20, 21 euro rent, I believe we are coming to, over a sort of the last 10, 12 years, it is a level we believe and we feel comfortable with as being a sort of longer term sustainable bottom of the market. Similarly, in the non-central locations, in places like the Jerozolimski corridor and Mokotów, we're now down around sort of 12.5 to 13.5, 14 euros. There is probably a little bit further to fall in a couple of those locations, but we do believe that when it hits around sort of 12.5 euros, 13 euros headline will be somewhere close to the bottom. And I think at the moment, when looking at that, if someone was to look at the yield differential there is between Warsaw City Centre, where we're now seeing yields getting close to 5%, and Mokotów, we do believe Mokotów is actually badly mispriced at the moment. If you're able to pick up buildings in Mokotów in the sevens, grade A buildings with excellent floor plates, we feel, and with the very, very low levels of construction in that market, in time when the congestion issue is removed, we do believe that some people who take a chance and have a crack at Mokotów could actually end up doing okay. With regard to the logistics market, one of the major trends we're seeing is an increase in lease lengths, and that is actually bringing a whole new field of investors into the market. So as a result, we're seeing a number of other players come in and JV with developers, not just the big name developers that we're all familiar with, but other smaller players who are coming into the market are now are getting funded by more adventurous forms of capital, let's call it, and they are now sort of finding out that within the market longer leases are becoming more the norm, and thus we see there will be opportunities both for the more core institutional investors as the end investor, but also for some more opportunistic value-add capital to partner with some of the reputable logistics developers to turn around projects that can be sold and significant increase in revenues made.
Thank you. So we will leave the slide. I would like to mention three things. First is what I already kind of highlighted in the context of the retail market, is the currency fluctuation. And maybe during the panel you can guys kind of tackle that. It's not an easy one. The second thing, which I think is our Hogan Loveless colleagues will mention today and elaborate on, are the taxes. And I think this is actually the easier bit, because this is something you can measure. You can implement it in the model, you can assume certain LTV or certain kind of cost of the capital, cost of the loan. But I think the third one is more challenging, although it's less kind of tangible, is the sentiment. And when we speak to you, when we speak to other investors, quite often, almost on every call, we have these questions about the political situation, what shall happen next, should I buy, should I sell? And I think hopefully this today panel will also give you some comfort, because we are monitoring the market very closely. We are very active here. We see questions, but at the same time we see actions, and investors are still buying. I think we have, as mentioned today, pretty strong fundamentals. Hopefully we will understand more on the tax side. So I think we are, despite this sentiment and questions, we are pretty positive about the future. But it would be also good to know your feedback and your opinion on that. So I think that's more or less as a kind of introduction from our side.